Hi everyone, and welcome to Understanding the Business Environment. So today we're lucky to have with us Paul Rodgers, who's the head of Trading Services Australia, Singapore at IG. Welcome, Paul. Thanks for coming along.
Thanks, Alberto. Yeah, great to be here. Really excited to be speaking to your students. It's great opportunity for me.
Oh, well, thank you. I think a lot of students will be interested in learning a little bit about IG and what it is you guys do. So can you give us a breakdown of how IG works?
IG's, we offer an online trading platform for our clients to be able to trade, and we target largely sort of retail clients, but we do also service sort of wholesale and institutional clients. We offer a range of products, so everything from your standard sort of shares, trading across global equity markets, but we also do offer the ability for clients to trade derivatives across a range of asset classes, so commodities, FX, crypto, and a few other markets. And it's a company that's been around for almost 50 years. It began in the UK. It initially started as a way for quite wealthy individuals in the UK to get access to a restricted market, so they couldn't trade gold, and so wanted to have access to that market when they weren't sort of institutional clients. And so that's how it began, and then it's obviously expanded, and it's part of our mission, I think, to be able to give ambitious people access to the capital markets to be able to trade and take advantage of those opportunities.
So, of course, IG is a global firm.
Yep.
As you said, it's been around for a long time. People know it. And to succeed in this space as a global firm, obviously IG has to be profitable, and do well and service its stakeholders and board and investors and so forth. Generally speaking, and you don't really have to focus on IG per se, but generally speaking, when we think about a global firm like IG or similar firms in any space, it doesn't have to be in finance or trading, but generally any space, how does the inner workings of a firm what makes a firm sort of go global? What facilitates that transition from starting somewhere in the UK and then suddenly saying, well, maybe we can venture out? Or what do you think are key aspects that might drive a company to look toward the world and see opportunities beyond its borders?
So I certainly think there's a strong human element to that. You've got to have leadership in place with the vision to be able to consider that. And then I think there's some requirements around, certainly capital becomes a major requirement to be able to support that growth. At different stages, you may be supporting growth through loss-taking activities to grow into a market until you get the economies of scale in that market to be profitable. And certainly we've seen that with some of our global expansion. At times you'll be getting in a market and you'll have high setup costs, you'll have regulatory requirements, you might even have sort of regulatory capital requirements that need to be satisfied. And that it's only at the point that you grow large enough within that market that each additional client or transaction you're adding in that market becomes profitable, and that the profit margin on each subsequent revenue dollar raised there increases to the point that it satisfies our capital, our profit margin requirements that certainly our investors look for. So we're a publicly traded firm. So we initially began as private, and some of our growth was in that, but it was only at the point that we listed and accessed sort of the increased capital that you get from going public, that we were able to really expand not only geographically, but also with the different product lines that we offer in terms of the different asset classes and the different products that we're allowed to try that we make available to our clients. So certainly a big one in that was we had to do 3 years development on building our own exchange in Europe, and so that's obviously something that for 3 years we saw no revenue from, and so it was sort of capital intensive, but now is where we're reaping sort of the profit from that investment.
That's really interesting, because it's often in class we get a feeling of these things and an understanding, but really the idea of loss in the short run and then this forward-thinking concept that global companies tend to have is quite important. But also you mentioned different, so this course is called Understanding the Business Environment, okay. But really what you just highlighted is that there's a bunch of different environments, and each has different regulatory processes and different governments, different sectors, different opportunities, and different risks. When a firm is looking to go global, how do these factors influence the choices you make?
It's a good question, because often when I look at the history of IG, it's certainly begun where there were similarities in those environments. So it began in the UK, and then it moved to Australia that had quite a similar sort of regulatory environment, sort of quite similar even legal history, that I think made that move quite easy, even on a language basis. So when we talk about sort of what are the resources you need people that can speak the local language or the language that you're trying to service in. And it's only over time where I think part of it's a confidence that a company can gain by being successful in other regions. It's also that the scale of the company means you can support greater sort of expansion opportunities, that we look to markets that were somewhat more dissimilar. And a key one with that might be the US, and you might think, well, the language is similar, there's some sort of shared legal history in that, but the regulatory environment is very different. The competitive environment was very different to where we've been before. And so it took a while for us to, because of the size of the market, feel that we were ready to compete there in terms of having the overall sort of profitability to support that growth in that investment phase. And so, yeah, I certainly think there's elements of, do we have an understanding of what that market is and how do we get that? And you can do that in a number of ways. You can either have that sort of in-house with your internal experience, your existing experience in the markets or the lines you're operating in, but it's also one that you can get through inorganic methods. So it could be finding local talent in that region. It could be through acquisition, which IG's certainly done, and companies globally do all the time, where they may say, we want to enter into that market, but we don't have the expertise needed, and so they'll look to acquire it through an acquisition or merger.
Right. So that's quite interesting, because how we enter different markets can really depend on the existing environment, the existing business infrastructure, whether we have a partner there. But you also mentioned a lot about skills, and this makes me think a lot about local talent, local labor market opportunities. And one of the things that I find is increasingly important for firms, and correct me if I'm wrong, is when they're trying to expand, this potential skills mismatch, which means I want to go to this country, but the local talent isn't exactly there. Do you find perhaps that then the business environment can be sort of facilitate the entrance, or government rather can facilitate the entrance of a company like yours? But how do we address this skill mismatch? It seems like a very long-term sort of issue.
Yeah, it's definitely one where you see in the short term it can be difficult to solve, because the time required to change the local environment to develop that skill can be quite difficult. There's times obviously that, yes, governments can be involved in that process, where you even look within the US, where sort of states are competing between each other for sort of companies. They will at different stages have local government incentives, either through tax incentives for the company to move, to then hope that spurs and provides the demand that will provide the reason for sort of the skills to be developed in that region, or it's through the support of the development of those skills through scholarships, sponsorships, through immigration policies to open up. Whereas we obviously, IG experienced it to some extent, not necessarily with where we were expanding to, but because of recent events with COVID, where we had a real change to the ability for people to travel, the ability for the changes in sort of makeups, students being a key one, where historically we've been able to service our APAC region extremely well from Melbourne, because we've had high numbers of international students that have studied here and then stayed on and form part of our labour market, that we've met that those language skills in particular that we've always looked for were in abundance, and then quickly became quite scarce, and a challenge for us to sort of fill our need on some of them.
Another thing you mentioned, though, is associated with sort of thinking of international students and starting and going there. Our students come from everywhere. I'm from Latin America as well, by the way. So, and some of our markets in the developing world, especially in the financial sector, can be relatively young. Sometimes in Latin America, they're not necessarily too young, but they are heavily constrained by regulation. In other parts of the world, they're young. And that means that when IG might consider moving there, might think, well, if I can move to this country, there's a lot of competition. And if I move here, I get first mover sort of advantage, but with an immature market. How do those trade-offs play in decision-making for a company like yours or other ones looking to expand?
Yeah, so it's certainly one where you're trying to assess what the prize is and what's the risk. And so, and it's trying to get that understanding of what is the weight of that risk versus the benefit you get. And certainly there's times where either through the first mover advantage of being the first one in, of being able to build your brand there when there's not the same sort of competition, can be incredibly important. And other times that can be achieved by entering the market without necessarily being there physically present, and that you can still service a market, especially as we are an online company, from perhaps an existing location. It might be, well, how do we service it? What are we missing in terms of resources? And so quite often it might be language, or it might be some other expertise in terms of client base in a particular country are looking for. I would say that's how we normally boil it down. It's sort of what are our risks and what are our and what's the potential sort of profit that's on there in the comparison, and then obviously what is it going to take for us to be able to do it. So if there's high costs to enter, whether that's because of competition of not being the first mover, or it's because of the expertise we need to buy by having locals because we don't understand the market as well, or whether it's because of a regulatory requirement where you've got sort of either high capital requirements to operate in that environment, or you've got restrictions on even being able to repatriate profit becomes a challenge in some environments as well.
That sounds interesting, because what you're mentioning, sort of having a capital requirement in a place, basically you're saying as an online company, sometimes you're actually required to have some sort of office there to operate. And that can be quite constraining. But in other cases, in your job as in trading services, I'm guessing you can look broadly toward different countries and say, yeah, sure, we don't need a presence there. How do you expand your market in these places? How do you virtually knock on people's doors, I guess?
Yeah, and that's where the balance, I think, it comes in that decision making. It's in some regions we can operate without necessarily needing to be based there and having sort of being locally licensed, but you may have restrictions on, say, the marketing activities you can take place, or the sort of on the ground activities that can be undertaken. And so then it's the trade-off of the costs of being able to go into that region and perform all those activities but get the benefit from them versus the looking to service them from a region we're already operating in. And there's a number of factors that play into it. So we're a company that operates sort of 24/7, but there's times where it makes sense based on time zone for when clients will be most active, or when they'll most want to be serviced, for where we need to make sure that we've got the resources in that time. There may be language requirements where, certainly we've got Spanish language speakers that are servicing both our European Spanish language clients and our South American Spanish language clients. But we've also found at times that there's a process where you do need to have that real localization of your content, that simply servicing a client in a language or providing them options in a language is not the same as giving them exactly what they value. And that sometimes takes a greater degree of localization, and that's where we begin to see, once that we might see the market's developing, or it's at a size where we think we can go in there and capture enough of it that it's worthwhile to be locally present versus sort of servicing them from our global base.
So it's a lot more nuanced when you're expanding. It's more than sort of thinking about numbers, and when you're sort of entering a place, it's also understanding the local culture. How do I communicate with these folks? What do I say? That plays a key role in business.
Yeah, and the other one that I think massively plays a part is the opportunity cost. Even within a company, you've got limited resources in terms of your capital, your labour, even our technology. Although it's incredibly scalable at times, there is a limit of how that can hit before you've got to invest in sort of increasing that. And there's always a decision where at any given time within our business, we will have 100 quite large projects that we could undertake that would be profitable and meet our sort of profitability requirements. but it's which of those are the key ones that we want to focus on and spend our resources, because it's sort of the best use of it, rather than trying to either do more with less, or by picking one that doesn't provide us that sort of that best return that we could spend those resources on.
And speaking of resources, one of the things that comes to mind as well is earlier you mentioned COVID, and obviously the labor market restrictions that were naturally born from that, in the sense that it became hard for IG, RMIT, and several other places to hire foreign talent.
Yeah.
But with an online company, we often like to think about COVID as a negative shock. But it's not always a negative shock, is it, for an online company like yours?
I mean, for us it was a boom time, really. And it largely, for us, came on the demand side. So whether it was people were home more and able to kind of take the opportunities to trade or use our products, or whether it was the restrictions of sort of the other ways that people could spend their money. They couldn't obviously travel, they couldn't go out to restaurants as much. So a lot of that that money they had for free spending could be spent or put towards their trading. We also saw huge volatility in capital markets. If people paid attention to what happened with sort of share markets globally over those couple of years, you saw large volatility. And our clients, because they are active traders, that's often what they're looking for, and there's a strong correlation between the volatility in the market and the activity of our traders, and that's both new clients coming into the market, but also the amount that our clients are trading. So it meant that we were actually busier than we've ever been, and significantly so. And so on that side of it, a huge plus. There were some definite challenges. In the short term, there was supply shortages on people being able to access monitors to be able to work from home, and office supplies, and then and obviously because of COVID, we saw those impacts on a larger scale through all kind of capital markets to a degree. So certainly you saw the shocks on supply side and what that did to certain companies. You saw it on the demand side and both ways, where for some companies it meant that their profitability was extremely reduced during that period, because people weren't able to access their products or their services, or they weren't able to continue to produce them. Or the flip side, like IG, where our demand drastically increased, and so it was, could we keep up with that demand, became the challenge.
Right, of course, and that is of course a big challenge, because if companies in a situation where there's a surge in demand can't, then people do have other options, and this can have long-term repercussions. What's interesting also is you mentioned volatility, in the world of investment. And yes, it can be attractive, but it can also be really scary.
Yeah.
As a trader, someone who would talk to people about who might want to start sort of building their portfolio, and a lot of students here do start thinking that way. Do we really worry about volatility? How much should we worry about volatility? And should we be looking more toward long-term sort of things with a nice, more constant trends? Or is it a mix of the two?
And that's where I think it becomes a personal decision on what is your risk tolerance and what are your aims with what you're doing. So certainly amongst our clients, we see a range. We offer products both here and in other jurisdictions that are quite long-term focused, and so they're about the sort of the long-term investment, and therefore the individual, intra-day, intra-week, intra-month, intra-year volatility doesn't particularly matter to them. It's about the long-term trends, and so over the long term, sort of the volatility matters less in terms of the impact it's going to have on your portfolio versus sort of long-term growth. But then we have some clients that will be trading to try to capture that volatility, and volatility works obviously both ways, in that in a highly volatile period, it means that your asset may be more likely to move up as well as down.
Right.
Our products do offer people the ability to especially our derivative products, to take advantage of those opportunities when the markets are also moving down. A key one that we try to, and certainly where we try to set our business up as, a key thing is providing both the information, education, and the tools that our clients will need to be successful in those periods. And so I think a key thing is about risk management, and it's about that. What is your tolerance for loss, and what is your tolerance for, so I think certainly we're not in the space that some firms are, where they'll offer advice, and that's where you'll be going to, say, a financial planner or an advisor who will often ask you, a series of questions to try to ascertain your risk tolerance. And it may be how would you feel if you lost 20% of your your portfolio? How would you feel if every 4 years you lost money? And those all factor into it. And I think where typically our active client base is that they probably are that more risk tolerant or less risk adverse, I should say, client base, and that they see the opportunity that it provides and feel confident that they can manage the risk themselves. And so, but there's a variety of products, and so that's where I'd say that the kind of the key is that understand your own risk tolerance, and then find the products that work for what fits within that.
That's really interesting. I mean, one of the things we learn when we're studying financial economics is this sort of life cycle hypothesis, and it basically says when you're a bit younger, you have a lot more time ahead of you, and you're perhaps looking to more long-term things, and you might take a little bit more risk here and there. As you get older, these preferences can change. Generally speaking, not necessarily talking about your own clients, but does that play out in practice? Do demographic indicators like age, gender, background, and so forth play a role? And how much does a company like yours need to understand these factors when servicing and talking to clients?
Yeah, I mean, it definitely does. It's certainly one where there's, age is highly correlated often with sort of accumulated wealth as well. So that plays a factor. It's sort of income, free income, so what's not sort of going on core requirements, and then also the risk appetite. So there will be changes in individuals' risk appetite over time. And it's also, the other thing is that risk appetite might have not changed, but the likelihood of when they'll need to sort of ultimately access that investment, or if you think going into retirement, you'll often see a shift of moving into lower risk investments, simply because that shorter term volatility becomes a much bigger issue at that time, where you'll start to draw down on those funds, whilst even if your individual risk tolerance may be sort of similar to that as an individual, when you're 20 or 25 or 30, you've got 40 years for those investments to sort of move up and down, and ultimately it's you may have a much longer investment horizon at that stage. We definitely do see, we do look at demographics in terms of interest, and I'm not always certain whether it's sort of purely on a risk tolerance basis or not, but certainly when we looked at who trades, say, crypto products, it's certainly one that it skewed a lot younger than what we would have seen for some of our asset classes. And there was a point where they did get sort of mainstream popularity, and that sort of balanced out a bit more. But certainly early on, it was skewed to a much younger sort of demographic pool.
Right, and other assets that have, I think, sort of gained in popularity are ones that are somewhat more socially conscious. Do you guys see a lot of growth in that space? And what do you think the future of sort of investment generally is going to be looking like with this backdrop of sort of climate change playing into it?
Yeah, it's an interesting one, and that I think it comes from sort of two directions. One is there sort of investor demand that's driving the change of the businesses to have that focus, and that can be from 2 points of view. It can be from a socially responsible point of view of investors saying, no, we want our companies to be more than just profit. It can also be that investors purely from a profit-driven point of view say, no, we want you to be sustainable so that the company can continue even if there are these future challenges coming with things like climate change or regulatory changes, because you'll have governments addressing things like whether it's carbon, whether it's looking at labour practices, whatever it may be. So it's certainly one that you've seen a rise, I think, of different companies globally talking about ESG.
Right.
And certainly I've noticed it in my time at at IG that it's definitely become more prevalent, and I think part of that has been driven by about younger staff coming in that they will immediately have an expectation of what are we doing in this space, what's the impact of our company.
Right.
It's one that I think our company's got better about explaining its purpose and its vision and why we exist,
Right.
and aligning it with some of the activities we undertake. So, I think only in the last 2 years that IG announced, started a practice now where it will donate sort of 1% of profits along to sort of within a certain group of charities that we support. And education's sort of a big one that IG has taken on and sees aligned with what we're trying to do with provide people an opportunity. And a key part of that, I think, is education.
That's interesting, because often we think of companies which are profitable. What you're essentially saying is that this can be an important source of differentiation amongst competitors, but it also internally can drive the right talent to work for you.
Yeah.
But at the same time, helps with your sort of corporate social responsibility strategy. On that point, on the corporate social responsibility issue, this term has been around for forever. I think since you and I were maybe little kids.
Yeah.
But it's still there. It still plays an important role. And do you find that companies perhaps that are not in line with that thinking or responding to these social pressures are perhaps not going to be around for much longer? Or do you think that companies themselves can build resilience in different ways depending on where they are?
It depends on where they're operating, and what, in some ways, what the expectations of those markets are. It's also one that I think there will be market pressures on them to do that, and even if it is on a labour side of things where you just won't have talent that wants to work for companies that aren't either operating in a sustainable way or thinking about that. And you've definitely got sort of activist investors that look at how companies perform in those spaces, and it's one that I think now is starting to be considered in terms of the risk companies pose by not having those sustainable practices in place, and what it can mean. I think at the moment, quite often, those are quite longer term risks, and so probably aren't impacting price as much as they will be in the future. And so from my side, I think I felt it certainly more from the way that we've had, honestly, sort of younger people coming into companies and sort of forcing that change. You've also had people that perhaps have been more socially conscious move up into within companies and started to have that impact as well.
Right. So there's a lot of social change happening, and it's not just happening outside of companies, it's also happening inside of companies in this changing behavior.
Yeah.
That's really interesting. Thinking about sort of the people coming in, especially grads coming in, I think a lot of RMIT students right now would be watching this video and thinking, gee, I'd like to be like Paul one day, or work
Sure.
with Paul. What do you recommend, people do? What should they get into? What TV shows should they follow? How do you start getting the right sort of mindset to work in a place like IG?
Do you have the natural interest in sort of financial markets, in capital markets, in trying to understand what's going on in the world through that lens? And the reason that becomes important is that it will honestly just make your day more enjoyable, regardless of where you work in the company. That if you are connected to markets in that way, I think there's a genuine excitement at times, even when we're incredibly busy because the markets are moving, that you'll be excited by what's sort of going on. In terms of how to assess where you want to do or prepare for it, I think it's one that it's, study's obviously a great way, and personal study, I think, to extend on that is just by following the news is certainly important. Looking at the financial news, I think there's some key thinkers at different stages that are worth following, and it's probably one that you'll find someone that just helps unlock sort of what's going on. So it's sort of thought leaders are definitely important to be looking at. For me, when I'm looking at sort of what what people we want to hire into the company at different stages. It's also, is this person going to be successful here? And so it's what kind of environment do I want to work in? And that can be the size of the company, it can be the size of the team you're a part of, it can be the actual nature of the work, it can be, do I agree with this company's values? Am I sort of, will I be excited to be part of that and helping to drive that forward or not? And I think everyone that's had any kind of work experience, whether it's from working at a retail store or a bar or whatever, there's times where work is just hard slog, but I think that it's the commitment to what, or the reason that company exists, that's going to sort of ensure that you feel rewarded at the end of the day or not, to be there. So that's one I'd look at is the culture of a company has a massive impact on whether you actually enjoy working there. In terms of the preparation, I'd just say, if possible, it's try to find people that work at that company and talk to them. I think companies are generally incredibly good at sort of marketing themselves.
Right.
And so it's by speaking to actual people that you start to get some of the cut through on that, rather than simply looking at sort of the website or the annual reports or whatever it may be.
Right. I like the message as well here, because when we think of labor markets, and often when we think of grad labor markets, we usually imagine this sort of demand curve that's sort of there, and it's sort of entirely external to any agency that I may have, and this sort of flat supply curve that they'll just come and pick, whoever. But people, graduates, have a lot of agency where they work, and they get to have a choice, right? And the value of education is giving you that choice, where I get to say, no, I don't want to work for you. I don't like what you do. Or, yeah, I like this environment. The people here are nice, and I can see myself growing here. And I think that's a message that we don't hear often enough. So it's good to hear it.
Yeah, and it's certainly one that I think there'll be times where you might take a job and it's not exactly what you wanted, or you didn't get the opportunity you wanted. But there's always things that you can take out of a company, a role, an experience that I think, similar to education, just adds to the resources that you've got, so that in the future you can say, I've exhibited these skills, I developed in this way, I got these opportunities and showed this. I don't know, and I think it's easy, sitting sort of however many years I am out of uni now, to say that that there's probably never been a better time to be a grad, almost, with the labour market the way it is. I think that the opportunities that are being opened up because of pressure through all ranks of labour, so not just the grads, but that probably never been higher, that there are those opportunities to really examine where you want to go. And it's not, certainly in some of the markets we operate in, in some countries, unemployment rates are 30%, and certainly youth unemployment sort of that high. And so the competition is very much favoured towards the supply side in those markets, where I think right now in Australia it's a bit more weighted towards labour candidates because demand's so strong. So. And
what's interesting also from what you mentioned is that companies or firms' profitability, when it comes to attracting the right type of labor, it's also a function of the type of environment that you create internally, where people can grow, share ideas, say, no, I think we should change this, I think we should go in this direction. Do you find that to be a key driver of success, and perhaps of international success, or is that a little bit more window dressing, maybe?
I think there's always a balance in terms of how much is that respected and how much is it allowed to thrive. I do think that what you'll find is, it's one of the reasons that I think businesses look for diversity. It's not because I often think that businesses are altruistic in any way. They want diversity because they want that diversity of experience, diversity of thought, so that when decisions are being made, there is that opportunity for someone to be that sort of dissenting voice that says, actually, we could do this different, and that it actually leads to sort of better outcomes.
Right.
There'll be, I think the challenge at times is still within companies in terms of that, are they open to that sort of diversity of thought? Are the people in positions of power, having being open to others' opinions, but also that there is that range of opinions in there's the decision makers, whether it's the leadership groups, whether it's the actual positions they've got, whether it's the opportunities for feedback to be given throughout. I think it's one at different stages. At IG, I think we've taken it on in different ways of how we want to achieve that, and we haven't always been successful at it. And so I think it's always sort of a work in progress for us on how we do better in there.
Right. I mean, the diversity component is quite interesting. You remind me of a couple of famous studies in financial economics that looked at diversity and long-term profitability. And the story was, in the short run, there's a bit of pushback.
Yeah.
Like, oh, that's too different. There's change. In the long run, it can be quite profitable because of what you just said. So it's really interesting to know that on a firm level, you sort of seen this happen as well.
Yeah, I think it's one that you see it in terms of everything from the sort of micro level of a team, where if there's diversity, there can at times be a lack of sort of cohesion initially, but then you'll find sort of in the best performing teams that there is that diversity, and it's got wide-ranging means of what diversity is, but it's one that I think certainly plays a part in my thinking of when I'm hiring, what we're looking for. It's one where we're assessing how we're performing in different. We've got different metrics on it, but it's one that it does take time, because quite often the easiest place to make the changes is sort of in your recruitment, so who you're bringing into a company, rather than where it's at throughout the company. So certainly it's one, I think, in the financial services industry, because we're a fintech, quite heavily, we've got a big part of our employee base is in our tech and our development side, and so I think that's another one in IT that historically has had quite strong bias towards males being in the industry, and it's one that even when we look at our client bases, sort of that's also been true, and it's one that I think is starting to change, and it's one that there's been a focus on that changing, but I think that's just one area in sort of diversity that's been looked at. But when I look at the diversity of background within IG, we've got people from 15 or 20 different countries working there. Right. So it's another way to get diversity of thought, is just with the different experiences that people would have had growing up. And
global firms, of course, have to think about diversity because it's part of their business. And I imagine there are opportunities for different offices in different countries to collaborate, in the sense that grads working for global firms like IG and other do get an opportunity to see the world a little bit. That sounds exciting, isn't it?
Yeah, we've certainly had people from our office go and work in different offices at different stages. Certainly, I definitely recommend to grads, if you're assessing it, it's something you want to do in the future. There's definitely, that could be one of the dimensions you look at companies based on. It's like, what are your opportunities to work in other locations? It's certainly one where you talk about sort of the benefits of diversity that we have by having offices in different locations. You can, through the collaboration you'll have on certain things, access that different thought, that different ascension. You'll see that UK, our head office, might sort of come up with a plan or something to roll out, and it may be through collaboration with our office in Japan or South Africa or elsewhere, that plan is either needs to be changed because the local conditions are different, or it may be that the idea gets enhanced by something that's delivered by those regions. Right,
that's really interesting, because we talked about sort of different business environments before, but in collaboration we also get to think that there's this sort of global emerging market environment, global business environment that's also really important to understand. Yeah. And there are opportunities for collaboration across borders and definitely in the investment space. What role does globalization play for a firm like you in terms of opportunities for clients, for example?
Yeah, so I think it's certainly one when people are assessing different investments, they will be looking at those local trends, the global trends, and what are going to be the impacts. It's one I think we saw, again, because of COVID, some of the impacts of what globalization had done to, say, supply chains, and the impact it had by not allowing sort of the movement of trade in quite the same way. Certainly for us as an online business, we won't have the same nature as sort of the movement of trade, but it still had impacts for us in terms of where we may have wanted to, even as simple as being able to move staff at different stages to cover short-term needs, to looking at where we wanted to exploit growth opportunities, but they're because of the restrictions at the time of getting in there, and the openness to global trade definitely impacts where we look. So certainly there's some governments that are protectionist in nature with regards to some foreign investment. That can play out by restrictions on sort of capital inflows or out of those markets. It can be on sort of the currency controls that take place. That even plays a part in terms of, for us, we allow our clients to trade in different currencies and access, to trade the value of those currencies. Now, if those currencies are restricted, it restricts sort of how we can offer those products as well.
Right, of course, it'll restrict your ability to move into these different places. And at the same time, it sounds like understanding sort of changes in demand and supply for different currencies across the board ends up being quite important. So investors do need to be savvy. It's not just someone who can just, you can't sort of just decide to do this, but you'll do better if you find out a little bit more as to what to do and take some steps, right?
Yeah, it's certainly one that, I'm probably someone, as a detail-oriented person, I always want more information than less. But it's always one I recommend that, people, if they're looking into investing in anything, that they feel that they've got the understanding, that they've got the information they need to be confident in outcomes. I think it's certainly one, if you're looking at sort of global companies, understanding where they're making profits and how they make their money, and the key drivers of that is kind of a key one. And when we talk about globalization, currency changes and different interest rate environments in those different countries can have an impact on their profitability in terms of they might, a company based in the US might make a lot of their revenue through, in China, and if the demand in China drops off, it's going to have an impact even though it's a US company. If demand picks up, but that the exchange rate changes sufficiently enough that revenue is not as valuable in US dollars, it's still going to affect the profitability. So I think it's always one where I always want to know more information. And I think quite often, investors always want to know more information. You see that markets react to news, and they'll react to news based on their expectation of what it was before. But it's why we value sort of education and resources so much, is because we want people to be fully informed. Certainly on our side, we're an execution-only broker, so that we don't offer our clients advice. They're the ones that are making that decision. They're the ones that are completing their own research, making the determination of where they think a price is going on a particular company, on an asset class, on a whatever it may be.
Great. Well, Paul, thank you so much for your time. Look, it's been fascinating. I learned a lot. I'm sure the students will learn a lot. It's good to see, I guess, an understanding of how companies work in practice, but also global firms. And really the end of the discussion, thinking about global markets, playing into those markets and the way different markets interact with each other. I think we speak about what sort of drives people to get into different things. And that's what drove me into a lot of economics. It's like these things are all interconnected and playing with each other, and there's spillover effects.
Yeah.
And, that's always been fascinating. So thanks for bringing that light into it. I think it's really interesting, and thanks for all your time.
Yeah, happy to be here. Thank you.